Assalamu alaikum guys. So really tough day in the markets today. In this video I'm going to focus on crypto and what the recent basically capitulation in prices means for the space. Now let's first level set and see where we are. Bitcoin for the first time since basically December of 2020 has dropped below 25,000. We're now looking at around 22,000 per token. For Bitcoin, it's down in the last 7 days, 27%. Ethereum is getting clobbered. It's down 35% in the last 7 days. Today alone, it's down 16%. And you just move down the list of cryptos by market cap and it doesn't get any prettier. BNB is down 25% in the last 7 days. Dogecoin is now going for 5 cents, down 35% in the last 7 days. Solana is down even more than Dogecoin in the last 7 days, down more than 35%. Basically, no one was spared from the recent drop. So what does this mean for the space? Some are saying that this means crypto is dead, all of crypto is a scam. Is this really true? To be honest, I think these people are being a bit over dramatic. If you look at history, this has happened before. At the start of 2018, the market cap for cryptocurrencies peaked at around $800 billion. Fast forward 12 months into the future, and the market cap was flirting with $100 billion. So this is a drop of close to 90%. We're not there yet. If you look at where we peaked recently, it was around the $3 trillion market cap. And today we're closer to $1 trillion. So we lost 2/3 of the value of the market. So if losing 90% between 2018 and 2019 did not necessarily mean that crypto was dead, losing 70% as we have from our peak in the last 9 months doesn't mean that crypto is dead either. That said, we may be in for a long period. You can see here between 2018 and basically 2020, where crypto did a whole lot of nothing. What we also know from experience is that a lot of crypto projects that were with us are going to be no longer with us by the time this drop is over. We already saw Luna go to zero and wipe out more than $60 billion in wealth from investors. And I suspect there's a lot of other projects that will follow suit. And what this recent drop in cryptocurrencies across the board also tells us is what we knew all along, which is a lot of buyers in this space were not actually investing. They were gambling. They were buying stuff on hype. They were buying stuff on momentum. They didn't really understand the utility, the usefulness of what they were buying. They weren't even sure if it existed, but they were hoping that someone else was going to come and buy it from them for more than what they bought it for. And it's because of this fact that now that the market is downtrending, which theoretically shouldn't affect the anticipated utility of these coins, they just want to get out before things get worse. So while not all crypto projects are Ponzi schemes, although a lot of them are, even for the projects that aren't Ponzi schemes, a lot of their investors were treating them like Ponzi schemes and were just hoping to be able to time things right and get out before the music stopped, so to speak. Another tidbit of information which this rapid decline makes clear is that much of the market, much of the 3 trillion maximum market cap that we saw was basically borrowed money, leverage to use a financial term. And when you have leverage in the market, selling begets more selling, because these loans were backed by the assets that are in these traders' accounts. And when the price starts moving south, brokerages start calling up these borrowers and saying, hey, you need to add more assets as collateral or we're going to start selling your positions. And some traders will be able to come up with more collateral and some won't, and the brokerages will sell those traders' assets. And this forced selling will bring upon more decline in the price, which will trigger more margin calls to indebted traders and so on. And I've mentioned on this channel before that I think borrowing money from your brokerage to trade is haram because the brokerage is actually benefiting from the loan that they're extending to you, and that benefit is a form of riba or interest on the loan. And I think just generally leverage and allowing traders to borrow money from brokerages in order to trade with has no real utility. It just causes markets when they're upward trending to overshoot on the upside, and it causes them to overshoot on the downside. So I really think that this practice of extending leverage to traders should eventually become illegal, because it's causing investors to buy at artificially high prices when things are going up, and causes their assets to be marked for less than what they're truly worth on the way down because of the forced selling that I mentioned. I'm sure many viewers are familiar with Michael Saylor and his company MicroStrategy, which is actually a software analytics company, but he has used the cash in this company to basically buy Bitcoin, and he's actually borrowed against his Bitcoin holdings. The CFO of MicroStrategy mentioned that around 21,000 is where they get to a point where they need to add more collateral to reinforce their positions. And so one assumes that at the $21,000 mark, if they aren't able to provide additional collateral to reinforce their position, they're going to be forced to sell some of their 130,000 Bitcoin. And so this leverage that's in the market really makes it hard to determine where the bottom is, because a lot of this selling is not willful selling, it's forced selling because of the margin calls that I described earlier. So to summarize, as it relates to the recent crypto drop, number one, I don't think that this means that crypto is dead. I think people that are saying that this proves that all crypto is a scam and it's all going to zero, I think they're being a bit overly dramatic. The second point is that hopefully some lessons are learned here, and that is not to invest in stuff that you don't understand, and also don't play the greater fool's game. Don't buy an asset just because you're betting that a greater fool is going to come along and buy it from you. You might end up being that fool if you do choose to play this game. And if you don't end up being the fool in one iteration, you're going to be encouraged to do it again and again until you are the fool and you end up learning your lesson. So just don't start playing that game altogether. Buy assets that you think either already have a utility or has a decent shot at having a utility. You're not going to get it right all the time, but if you understand what you have in your portfolio, why you bought what you bought, you have less of a chance of panic selling, and you increase your odds of selling when the price is no longer justified by the intended utility of the asset that you bought. The third lesson is that leverage is evil. I really think it is. I think it should be illegal for brokerages to extend leverage to traders because it causes massive distortions in the market, both on the upside and the downside. And the fourth takeaway from this massive drop is that if you have identified assets or hold assets that you think have a utility or have a good chance of having a utility, then you now have a chance for the next few months to buy these assets at prices that are much more attractive than they previously were. Just keep in mind that this is probably not going to be a quick turnaround by any stretch of the imagination. So if you are buying, you better be in this for the long haul, or else don't be in it at all. If you'd like to see what I'm buying, consider becoming a PIF member, where you're privy to insights that are written and presented from the perspectives of people who are trying to build wealth in a halal way. If you found this video beneficial, I'd really appreciate if you left a like, subscribe for more content like it, and until next time, make sure to take care of yourself. Assalamu alaikum, and peace be upon you all.